Welcome back to Strongman Personal Finance, everybody. Now, I was on Jay Nagy's YouTube channel. He's my partner in crime. We do live streams every Saturday together. So if you've subscribed to me and you haven't subscribed to him, you probably should. Anyway, he's my partner in crime. And he posted a video recently about Meet Kevin, who is this completely moronic garbage investor that misleads people into terrible, terrible investing strategies. And he got a lot of hate for his video where he dumped on Meet Kevin's garbage 50% Tesla portfolio. And all these people were commenting, oh, you can't build wealth quickly with index funds. I want to get rich by the time I'm 25, so I need to buy Tesla. And all these people, they just can't believe that with a high savings rate and consistency, you can build wealth very, very quickly. Now, Jay gave me the idea to show people my thrift savings plan. So I have two thrift savings plans. It's my 401k. I have the one that's in the federal government, and I have one that's with the Army. Now, I've been working for the federal government for 3 years, and I haven't made that much in the federal government. I started working there, and I made $37,000 a year. That's freaking garbage, at least for me, okay? I don't want to offend you if you make that much. But I started working there, and I made $37,000 a year. And then I've gotten a couple pay raises, but I don't really make that much there, okay? But even then, I have this cool strategy where I set up monthly contributions, or biweekly contributions to be exact, into my thrift savings plan. And you're going to see how much wealth I've built in 3 years by only making $37,000 a year, plus a couple little raises, okay? So I'm in like the mid-60s now. I know, I revealed my salary. Oh my God, oh my God, oh my God. But I only make in the mid-60s now. And half of the years, I made way less than that. And I was still able to build a decent amount of wealth in my thrift savings plan. So I'm going to go ahead and pull up what is in my thrift savings plan account at my federal government job. Now, if you see the number and you're like, that's all you have, strong man. Well, guess what? This is my federal thrift savings plan. I'm not going to show you my Army investments, and I'm not going to show you all my other investments because I'm not one of those idiot YouTubers that tries to impress people with how large their portfolio is. The only purpose of this exercise is to show you that you don't have to make a lot of money, but as long as you consistently invest in your thrift savings plan or your 401k and your IRA, you can build wealth very, very quickly. So let's go ahead and look at my thrift savings plan. 3 years of work, starting at $37,000 a year. And that was something that was even part-time, okay? But I contributed to my TSP every 2 weeks, and I got a match, and I never wavered, and I didn't screw around with my asset allocation. So let's go look. All right, so hopefully you can see my screen. Yeah, you can. This is what I have in my thrift savings plan. Now, to orient this to you, basically, the thrift savings plan has a couple of funds. They have 5 core funds: the G fund, the F fund, the C fund, the S fund, and the I fund. The C fund is stock, S fund is stock, and I fund is stock. Now, I don't have any money in the G or F fund. Those are basically bond funds because I'm an aggressive investor and I don't think I need bonds right now. And I'm not a fan of bonds right now. So this column represents the funds that I have. Now, the shares are the number of shares that you have of the fund. So that doesn't mean the amount of money you have. It means whatever price the share is times the number of shares is what you have in the fund. So I have 205 shares of the C fund. That's the S&P 500. I have 90 shares of the S fund. That's the extended market index. And then I have 223 shares of the I fund. Now, this just shows you the share price. That doesn't matter. Now, the one I wanted to show you was the current balance inside of my 401k that I work with after only 3 years of contributions, investing in boring index funds that these freaking clowns on YouTube with their Robinhood accounts, they pretend like you can't make a lot of money off. And it's complete BS. Now, after only 3 years of investing, I set up my asset allocation and I just let it go. I don't even think about it. It just comes out of my paycheck and it gets deposited. After 3 years, I have $28,630 in there. Now, like I said before, I'm not trying to impress you. I'm trying to show you that you can save a decent amount of money even though you don't make crap, as long as you contribute consistently to your retirement plan. And I'll say it again if somebody just came in. I only started making $37,000 a year when I first started working at my current job. And part of that time was part-time. So I really wasn't putting that much into my TSP until recently. Now, I have $28,630 in my TSP. The additional benefit is that it's tax advantaged. This is a Roth TSP. So once the money goes in there, that money is going to grow tax-free for the rest of my life. So when I'm old and crusty, whatever this $28,000 becomes, I'm going to be able to take out whatever I want and not pay a dime of tax. That's the beauty of the Roth 401k or TSP. Now, here's my asset allocation. Well, this isn't my asset allocation. This is how the account is split out. So I have 45% in the C fund, 26% in the S fund, and 29% in the I fund. Now, the reason these aren't round numbers, I actually contribute 45 to the C, 25 to the S, and 30 to the I. But based on market fluctuations, some funds are going to do better than others, which means some funds are going to become overrepresented. So, for example, if the S fund gets too high, ooh, that was loud. If the S fund gets too high, let's say it gets up to 30%, but I want 25%, I'll sell some of the S fund and I'll buy the C and I. That's all you have to do. You can do that once a year, okay? See how hard it is to build wealth with index fund investing? Yeah, it's hard. 28 grand, and I'm not bragging. I just contribute money every month, and I made $37,000 a year, and I got a couple raises, and that's what I have. Now, how much am I putting into this account now? Well, every 2 weeks, I put in $750. And I just started doing this because I finally got a couple raises and I can make enough to actually max my thrift savings plan. Now, that is the amount that you can put in bi-weekly to not hit the contribution limit cap. So for example, if you put in $750 every 2 weeks for a whole work year, you're going to put a total of $19,500 a year. That is the cap on how much you can contribute to your 401k that you have at your work. So that's what I'm doing. So I said, okay, there's 26 pay periods. So I took 19,500 divided by 26 pay periods. And I said, okay, I can put $750 into this every single 2 weeks. And by the end of the year, I'll have completely maxed it out. Now you can put more in earlier and more in later, but I like to spread it out. I like a consistent paycheck. So I put $750 out of my paycheck and it goes into the TSP. In addition to that, most workplaces have a match. Now, I get a 5% salary match on my contributions. So an additional $124 is matched when I contribute. So if you total it up on an annual basis, I'm putting in $22,737 a year into my 401k. And that doesn't even include my IRA. That's an additional $6,000. So if you max your 401k, and you get a match and you max your IRA, you could put roughly $28,000 a year. And if you have a spouse, you can put even more. And all these accounts are tax advantaged. So look at that. I have $28,000 in here right now in boring index funds that you can't make money off index funds. That's for the losers. You should just buy Tesla. Yeah. $28,000 for 3 years of work and not making a lot of money. That's pretty freaking good. And then on top of that, I'm putting in $22,000 more every single freaking year. Okay. This is how you build wealth. This is how you build your fortune. You don't do it by buying stupid meme stocks, being an idiot, watching YouTube channels with a bunch of clowns that have no idea what they're doing, have no idea how tax advantages work. They just literally buy crap in Robinhood, 3 stocks, 10 stocks that they read on a freaking article. And they're like, oh, look how smart I am. Look at my portfolio. And that's what they do on Robinhood. It pisses me off. Like, I'm sick of all these people that pretend like they know how to build wealth when they don't know what the hell they're doing. They don't know anything about how to build wealth. So I wanted to show you that even though you may not make a lot of money, I know some of you may think $37,000 is a lot of money. I didn't think it was that much. That's what I made. But I consistently put money into my retirement account. And after 3 years, I got 28 grand. And then every year I add 22,000 more. So it's going to be 50,000, 72,000, 90 something thousand, 100 and something thousand. going year to year to year. And that's not even including gains. Okay. That's how you build wealth. That's how you get rich. So ignore any idiots that you're subscribed to that dump on the 401k, like Grant Cardone. That guy's an idiot and a clown, and I hate him. And all these other clowns that are showing you Robinhood that are paying massive fees and massive taxes. Because when I put money in here, I don't pay any taxes. This is a tax advantage account. So the money you see is the money you get. But if you had $28,000 and half of that was gains in a taxable account, you're going to pay thousands of dollars in taxes. Now, if you spread that out over 30 years, you could be paying hundreds of thousands of dollars of taxes if you don't have investments in tax advantage accounts, okay? So this is my amazing federal employee portfolio, and I have more investments, and I buy the same crap in my other investments, okay? That's it. All right, do we have any questions? Jay Cabrera, I want to be a Dogenaire. Speaking of Dogecoin, I mean, Jesus, what is it, like 60 something right now? It's pretty ridiculous, but it's stupid. Like you don't want to put your money in Dogecoin unless it's just like screw around money. Like, oh, here's $200, whatever, and see where it goes. Because I mean, it has no underlying value, and everybody considers it to be DUI in general on top of that. So I would never touch Dogecoin. But you want to put some money into it, whatever. Just don't put a lot into it. And if you lose all your money, don't get mad. All right. Well, that's it. Thanks for tuning in, guys. I'm about to go have